Didn't you know that you can earn passive income for life by online stock trading? Check this out. Hey guys, so welcome to another edition of Stock Smart's Basics, where we give you basic foundational information on how you can win using the stock market, particularly using online stock trading. Now, I mentioned that over the past videos that you can make money in the stock market by buying and selling, by buying, holding it, and if it goes up at a certain period of time, you can take profits and sell. That's one good way to earn. But what if you can actually make money in the stock market by just holding it and getting passive income for life? And this is very good because I know a lot of people don't want to trade, don't want to buy and sell, but they still want exposure that will give them higher returns than what they get from their time deposits or bonds. Or if you are not entrepreneurial, this is for you because it can give you returns that are much higher still, and it can give you income, not just now, but it can give you passive income repeatedly over the long term. So how does it work? It's what you call dividend investing. It basically means you buying stocks that have dividends, that give dividends on a regular basis. If you're new to the market, what does dividends mean? Dividend basically means excess earnings from the company after removing all of their expenses and all of their projects they will use for the next year. This is surplus money that instead of them storing it in the bank where it doesn't earn much, they're there to give it back to you as an investor. So there are a lot of companies that are good, that are growing, that apart from what they have used for their expansion, they still deploy it back to investors. So this is very good. Why? As a long-term investor, the advantage of that is basically this. If you are investing in the stock market for the long term, a company that has dividends is a company that basically is a good company. Why? Because they're not just earning. They're earning more than enough that they can actually return and bring back and give back some of its returns back to investors like you and me. So that's what's amazing about it. You can just buy the stock, and as long as they're earning and as long as they're giving out dividends on a yearly basis, you can hold on to them up until you want to stay away from the market already. So that's why it becomes passive. That's why it becomes investing for the long term on a passive level, which still beats time deposits, which still beats bonds, and which gives you an exposure to an extra level of earnings. Why? While you are getting dividends and you are holding it, as long as it's a good company, it still gives you a potential that, hey, the stock price can go up over a period of time. So that's what dividend investing is. The goal is to hold on to it, to stay in the company, to stay invested until it still gives you dividend on a regular basis. You don't need to sell it. So the only time you sell is if you see the dividends start to diminish, if you see the dividends start to change, or if they stop giving dividends out completely. But until that happens, you don't need to sell. You can be a passive investor. You can make money in the market by not watching it every day, but still beat inflation, still beat time deposits, and still beat bonds out there. So this is one way for you to win. And this is one way for you that even if you're busy with your job and with your business, you can still be invested in the stock market and get better return. The good thing about buying stocks with dividends is that since they are good companies that are growing and that are earning, majority of the companies that have given you capital appreciation from Ayala Land, Jollibee, Ayala Corp, Globe, don't just have dividends, but they also have capital appreciation for the long term. So what's nice about that is this: as the stock price is increasing, guess what? Your dividends are also increasing. And that's what's nice about it. Above and beyond the yield, above and beyond the percentage yield that you can get per year, it's also the earnings that you can get that's proportional to the stock price. So as the stock price goes up through the years, you can expect also that your dividend yield will also go up over a stretched period of time. So if you want to invest via dividends, here are a couple of things that you need to look at to know if the company that you are investing on is something that could give you a good return in the future. Number one, look at the company and the dividend that it gives out on a regular basis. It has to be something that's consistent yearly, that the dividends that they are giving out on a yearly basis is almost the same, or if not the same, it should be increasing. This shows you how good and healthy the company is, that they're actually earning more than what's expected, and they have extra amount of income that they can give you on a regular basis. Number two is the dividend yield. Dividend yield basically is the dividend divided by the stock, the price of acquisition, or the price that you bought the stock. Meaning, the lower you buy the stock, the higher your dividend yield will be. So this can be your comparison that if you get a dividend yield of say 5% up against a time deposit that gives you 2%, you are getting a higher yield, a higher rate of return. So the technique here is this: the lower the stock goes, the higher your dividend yield will be. Now, how does it look like from an online platform? What's nice about that is everything you need to know can be found in an online platform. Everything you need to know can be found in DoTrade Asia Prime also. It will give you everything you need to get the right research, the right data for you to make holistic decisions. Everything right now is just based on a click of a button and internet access that you have. So guys, as what I've mentioned, everything that you need to know can be found in your online broker. For this video, we have DoTrade Asia Prime, and it can show you the details that you need to determine if the dividend that the stock is giving you is somewhat sufficient. It can give you passive income for life. So similar to what we've been doing before, just go to the company that you want to do your research on, also based on this app, based on this website, so you can do your analysis. So it's pretty much simple. All you have to do is go to the research tab. As you go to the research tab, type the company that you would like to analyze. So for example, you would want to analyze SM Prime Holdings or SMPH. You just scroll down. As you start to scroll down, you would see this area where valuations are placed, and I want you to zero in and focus into the trailing 12-month dividend, and I want you to zero in also on the dividend yield that's right below it. It shows you for SM Prime Holdings that the trailing 12-month dividend is 0.35. So meaning if you bought the stock and then you held it before the X date, or you own the stock prior to the X date, you would receive 0.35 centavos worth of dividends. So you just multiply it. If you have 1 share, you get 0.35. You have 100 shares multiplied by 0.35. You have 1,000 shares multiplied by 0.35, and that's how much dividends you would earn for this particular stock. So what's nice about that is it becomes predictable. The earnings would now become predictable because you can compute, hey, how much do I actually need per year to be able to survive? So you can retroactively compute from there how much you could actually earn. So it's simple. If I want to analyze, for example, Globe, which gives you one of the relatively higher dividends. Look at this. At night, for the past 12 months, it gave you 91 pesos. So you multiply it. You want to earn 9,100 pesos from Globe via dividends. You just need roughly 100 shares of Globe. If you want to earn 91,000, you need 1,000 shares. If you want to earn 910,000, you need 10,000 shares. So on and on. PLDT also gives good dividends. The trailing 12-month dividend of PLDT is 64 pesos. GMA 7 is at around 0.50 centavos. And I want you to zero in also on the dividend yield. You'll see here that GMA 7 is one of the highest dividend yields out there. It's around 9.03% given its current price of 5.54, and given that it will give you 50 centavos. So this is something that's relatively high. You can also look at Shangri-La, which, for those who don't know, it's a hotel operator which has the Fort, Ortigas, Makati, and the one in Boracay. Its trailing 12-month dividend is around 6.31%, which is much higher than time deposits and bonds. It gives you 0.1955 centavos worth of dividends. So another example of a company that gives you a good yield is also SGI Solid Group Inc. It's a holding company. It gives you 4.55% yield, again higher than the normal time deposit rate. So that's what's nice about it. You can work backward. Either you compute how much peso amount would you want to get based on the dividends that they are giving, and then multiply it
by the number of shares that you have, or if you're sensitive on the percentage, you're sensitive on the rate, you can compute on the dividend yield that you get. So this is pretty much dependent on the number or the stock, the amount that you would buy the stock. The lower you buy the stock, the better your dividend yield will be. So there. Using the traditional 2Trade Asia app, you can also analyze dividends using that website. You just have to click either here in the research portion, you click the stock that of course you want to analyze, and after clicking that, you will be given click valuations. As you click valuations, you just need to scroll down. You just need to click valuations, and as you click valuations, it will give you all the dividend info. And as what I've mentioned, you want the dividend to be consistent, meaning for Ayala Land, it's been giving you dividends every year since 2013, and not just that, since 2013 the dividend has been increasing 0.29, 0.41, 0.41, 0.48, 0.48. You want a dividend, a company that gives out dividend in that aspect, that it's consistent, but not just consistent, that it's increasing and going up. So let me give you another example. I showed Globe a while ago, I'll show it again. So I'll just say this over and over. You want companies that give consistent dividends, that it's either consistent or it's increasing on a year-to-year basis. So that's what's nice about it, and that's how you can also spin it and make money off of it. Now look at this. For Globe, it's basically this. The dividend that they've been giving also from 2013 has been increasing from 67 pesos in 2013 all the way to 91 pesos in 2017. So again, everything you need to know is found in your 2Trade Asia website, app, and even 2Trade Asia Prime.
That's what I like about dividend investing. If the stock has dividends, it means that it won't close down. You won't see a company close down if they're earning more than what is actually required, if they have more than enough that they have for their own operations, for their own expansion, and also to give out to shareholders as some sort of return. So I hope this video gives you a nudge and encourages you to invest, because regardless if you're an entrepreneur, you're an employee, you're a OFW, or a stay-at-home mom, you can use dividend investing via online trading to make money for you repeatedly over the long term. And the heart of all of this is I really want you to be encouraged that it's not as hard anymore. Online trading has made investing in the stock market as easy and as reasonable, because wherever you are, you can do it. And 2Trade Asia Prime is a good example of an online broker that will give you access to this information, but not just information, it will allow you to execute. Because at the end of the day, I want you to be financially free, and I really believe the stock market is one of the best ways for you to do it. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. Bye-bye.